Qualcomm is making headlines, and we're diving in right now. First, Qualcomm Nasdaq. QCOM just reported Q1 earnings, meeting revenue expectations at $10.6 billion, but next quarter's guidance is a different story, coming in 6.4% below estimates. CEO Cristiano Amon is pointing to a step function increase in strategic customer engagement, fueled by their leadership in agentic AI. But can Qualcomm overcome handset weakness and memory supply constraints? We'll break down the numbers and the outlook. Plus, we'll tell you if analysts think now is the time to buy.
Tired of dropping your phone or struggling to hold it with one hand? The PopSocket's Pop Grip gives you a secure grip, works as a phone stand, and even lets you swap the top for a fresh new look. Simple, useful, and perfect for everyday phone use. Click the link in the comments to grab yours on Amazon.
Now, let's shift gears to another look at Qualcomm. Despite a recent earnings report, the chipmaker is forecasting third-quarter revenue and adjusted profit below Wall Street expectations, citing a hit to demand from a memory chip shortage. Shares fell 4% in extended trading, but CEO Cristiano Amon believes the smartphone market is about to rebound, calling a bottom for the current fiscal quarter. Is this a temporary setback or a sign of deeper issues? We'll explore the details and what it means for major customers like Apple and Samsung. The semiconductor sector is seeing a surge, and Qualcomm is a key part of that story. Big tech earnings from Meta and Microsoft are driving capital expenditures in AI infrastructure, benefiting companies like Intel and AMD. But Qualcomm is also getting a boost, with its stock surging 9% in pre-market trading after a better-than-expected first quarter. Plus, tech analyst Ming-Chi Kuo says OpenAI is working with Qualcomm on smartphone processors. Is this the start of a major rally for the chip sector? Finally, are you ready to unlock the potential of the $250 trillion AI revolution? Insider Monkey is reporting on a breakthrough technology that could reshape the global economy, and they've identified one under-owned company holding the key. From Elon Musk's predictions of 10 billion humanoid robots to the insights of Jeff Bezos, the AI wave is building. Don't miss out on this exclusive report. Subscribe to our premium readership newsletter for just $9.99 a month and gain access to in-depth research and exclusive insights. Subscribe now, hit the bell, and let's grow together. Qualcomm Nasdaq, QCOM, navigated a mixed Q1 2026, meeting revenue expectations at $10.6 billion, a slight year-over-year decline of 2.2%. While exceeding profit estimates with a non-GAAP EPS of $2.65. However, forward-looking guidance of $9.6 billion for next quarter fell short of analyst projections, signaling continued pressure. The company's Automotive and Internet of Things segments demonstrated robust growth, alongside surging design activity in AI-enabled devices, driving record automotive revenues. CEO Cristiano Amon highlighted a step function increase in strategic customer engagement, fueled by Qualcomm's leadership in agentic AI, on-device AI capable of complex, secure tasks. Despite this, the handset business, particularly in China, remains challenged by cautious OEM behavior and inventory adjustments. Qualcomm anticipates handset revenue from Chinese customers to stabilize next quarter, with sequential growth expected. CFO Akash Palkhiwala predicts the channel inventory drawdown will soon conclude, aligning shipments with market demand. Looking ahead, the company is optimistic, driven by rising content per vehicle in the automotive sector and upcoming AI-enabled PC and data center silicon launches. Analysts will be closely monitoring handset shipment recovery, the rollout of the Snapdragon digital chassis, and progress with custom silicon engagements. Qualcomm currently trades at $177.05, a significant jump from $150.77 pre-earnings. Is this an inflection point? Our full research report offers deeper insights. And don't miss our top 6 stocks for this week, identified by our AI system, which previously flagged Palantir, AppLovin, and NVIDIA before their substantial gains. Discover your next potential winner. Details available now. Qualcomm shares dipped nearly 4% in after-hours trading Wednesday after the chipmaker issued a quarterly forecast below Wall Street expectations, citing ongoing memory chip shortages impacting consumer electronics demand. The company now anticipates revenue between $9.02 and $10 billion, falling short of the $10.27 billion estimate. Adjusted profit is projected between $2.10 and $2.30 per share, compared to the expected $2.45. Despite the cautious outlook, CEO Cristiano Amon expressed optimism, stating the smartphone market is poised for a rebound following the current quarter, and that the worst of the memory crunch is over. Qualcomm's licensing business outperformed expectations, providing insights into smartphone manufacturers' plans. The company reported second quarter revenue of $10.6 billion, meeting forecasts. Global smartphone shipments declined 6% in the first quarter due to these shortages, which analysts predict could persist until late next year. Qualcomm, a key supplier to Apple, Samsung, and major Chinese phone brands, is particularly vulnerable to the downturn, with lower to mid-tier devices facing the most significant impact. Year-to-date, Qualcomm's shares are down roughly 10% after a strong 2025. To bolster investor confidence, Qualcomm recently announced a $20 billion stock buyback program. Looking ahead, the company is aggressively pursuing the data center chip market, targeting shipments later this year with CPUs, accelerators, and custom ASICs, leveraging its acquisition of Alphawave. Analysts anticipate increased chip revenue for Qualcomm driven by the growing demand for premium and AI-powered devices. Although second quarter chip revenue of $9.08 billion slightly missed estimates, and the third quarter forecast of $7.09 to $8.5 billion also fell short of projections. Semiconductor stocks are surging today, fueled by robust earnings reports from big tech giants and positive signals from key players in the chip sector. Qualcomm is leading the charge, jumping nearly 9% in pre-market trading after reporting better-than-expected first-quarter results. The company anticipates a rebound in the Chinese smartphone market this quarter and expects to ship custom silicon to a major hyperscaler later this year. This momentum is extending across the industry, with Broadcom, Intel, and AMD also experiencing significant gains. The rally is largely attributed to big tech companies like Meta and Microsoft signaling increased capital expenditures on artificial intelligence infrastructure. Wall Street analysts believe Intel and AMD, manufacturers of crucial CPUs for agentic AI, stand to benefit substantially. Furthermore, memory and data storage providers like SanDisk, Western Digital, and Seagate are also seeing pre-market boosts, particularly after Seagate reported strong results. Semiconductor stocks have been on a hot streak recently, driven by investor enthusiasm surrounding agentic AI, where bots and agents operate on behalf of users. Adding to the excitement, Qualcomm shares saw a 15% jump earlier this week following reports that OpenAI is collaborating with Qualcomm to develop smartphone processors. This is Inez Fair reporting for Channel YouTube. A seismic shift is underway in the technology sector, driven by the rapid advancement of artificial intelligence. Experts, from Jeff Bezos to Elon Musk, are predicting a transformative impact on the global economy, with some estimates suggesting a potential value of $250 trillion by 2040. While companies like Tesla, Nvidia, Alphabet, and Microsoft are leading the charge, analysts are pointing to a smaller, under-owned company as a key enabler of this AI revolution, a company possessing remarkably affordable AI technology. This firm's innovation is attracting significant attention from billionaires and hedge funds alike, and insiders believe it could be a pivotal investment opportunity. A detailed report has been compiled, revealing the specifics of this company and its groundbreaking technology, available now for just $9.99 a month. Subscribers gain access to in-depth research, exclusive stock picks, premium reports, ad-free browsing, and a 30-day money-back guarantee. With limited spots available, only 1,000 experts urge investors to act quickly and secure their place before Wall Street fully recognizes the potential of this game-changing AI stock. Don't miss out on this chance to shape your investment future. Subscribe today.